Hello and welcome to today's session. We are going to be looking at the art of buying and selling, which is what we do in Forex, right? We buy and we sell currencies. So how is this done? What does it involve? As a new trader who is beginning to learn how to trade, who is maybe just have few very slow experience in the market, you probably still are struggling to fully have a grasp of what the buying and selling involves, what Forex trading is all about and all of that. So today you would have a better grasp of it. I would enjoin you to take note as you listen to me on this class, okay? So let's go. What do we do when we trade? When we say, I'm a Forex trader, what am I doing? I buy, okay? I buy and I sell. What? Currencies. I buy and I sell currencies. If you had watched what is Forex trading, you would have an idea of what I am talking about. I buy and sell currency online, like on my smart device, on phone, on computer. I analyze the chart, I see what the price is doing at the moment, and I make entry decision. When I said that the price is going to rise, I do a buy. If I'm expecting that the price is going to fall, what do? I do a sell. All right. So how do you know at what time to buy and sell? The question first is, what is moving price? All right. What is going to make price increase and what is going to make it reduce? Well, price movement is based on the power of demand and supply. And what we are looking for as traders is the imbalance between demand and supply. When demands get higher than supply of the currencies, then we'd expect that the price is going to rise. When supply is the one that is getting higher and demand reduces, nobody is asking for the currency, nobody is buying it. What happens? The price is going to reduce. We learned this in economics in school. If you were not the sorts that get bored when you're in the economics class in school, you probably would already understand what I am talking about here. Okay, so the higher the demand, the higher the price. The higher the supply, the lower the price, or when demand reduces, the lower the price. And that's what we are looking at in the market. If one becomes higher than the other, then we know what to do, okay? Now, there are things that move demand and supply in every country. For the country's currency, what is going to make demand for a particular currency to increase? Every currency belongs to a country, right? It is not that we're talking about a currency owned by Olugbemi or owned by you watching at this time, all right? We're talking about every country's currency. So for you to have an idea of what will move the currency of that country, it is important to have an idea of the fundamental, the overall economy of the overall state of the country's economy. And that would help us understand what is happening. What are some of this? The productivity. How productive is this economy? What's the employment rate like? Are people employed? Is income flowing? All right. These are some of the things that would either boost the economy or make it low, activity to be low in the economy. Manufacturing, how well are the manufacturing outputs, the inputs and the outputs in the manufacturing sectors of the country? What is the international trade like? So I talk about demand and supply. Say that there's a country that does a lot of exports, they produce so many things and they export these things. There will be a lot of international trade because now they are doing business with other countries. And these countries wanting to buy from them would have to convert their own currency to this exporting country's currency. And because of the demand for their currency, as they are demanding for the product, what happens? The exchange rate would increase, all right? So that comes to the whole picture of what is happening in the economy, and that would help us to learn what to do when it comes to trading. We also have things like interest rates. The central bank, the government would make monetary decision based on what is happening. Sometimes they want to curb inflation, okay? They want to curb inflation, and then interest rates will be increased. There are times that the interest rate will be reduced, maybe when there's deflation and all of that. Okay, so all of this would have impact on what is happening in that economy, whether the demand for the currency is going to increase or whether it's going to reduce. And this can also help us decide on what we are doing in the market. So I am hoping that what you are listening now is helping you have an idea of what trading really involves. We are not here to gamble, because a lot of people look at Forex, they want to hear Forex trading. It sounds like some gamble to them. No, the value of a country's currency will either increase or decrease based on the overall state of that country's economy. And our own is to learn at what point is this likely going to increase, at what point is it likely going to reduce, and then be able to trade and make money from these differentials. All right. Now, these are examples. Let's say that I am looking at Euro USD. Euro USD, this is European currency. This is United States currency, dollar. All right. Now, I am looking at the two of them and I see the quotes like this, because currency are quoted in pair. You're not going to trade only USD. We are exchanging currency for another currency. We are not exchanging currency for shoe. We're not exchanging it for services, products, bags, shoe, clothing. No, we're exchanging one currency for another. That's what we do when we talk about Forex trading, right? So when you have a currency pair like this, one currency in front, the other here, this first one of this currency pair is called the base currency. The second one is referred to as the quote currency. Now, let's say based on your analysis of the economy, you analyze the economy of Europe, the European economy, and you see that it is strong, all right? Everything, the interest rate is increasing, the exchange rate of the currency is increasing, and you feel that the currency is stronger this time. And then you analyze the quote currency, which is the US dollar in this case, and your analysis shows you that it's weak. What kind of trade would you be taking? Of course, you would be buying. All right. And on the other hand, if you analyze and the base currency is weak, while the quote currency is the one that is stronger, what are you going to be doing? You will be selling. And that's basically what we do in the market. So you can analyze the fundamentals of what is happening in the economy. You go to your chart, you analyze, and then you make entry decision, whether you want to buy or you want to sell. Another example, say we have the USD Swiss franc. The CHF is the acronym for Swiss franc, all right? That's the short form of Swiss franc. And so in this pair, we have the US dollar being the base currency and the CHF or Swiss franc being the quote currency. Now, let's say I analyze and the base currency is the one that is weak, the quote currency, which is the CHF, is strong. Then what kind of trade would I do? I would sell. If the base currency, which is the USD, is the one that is strong, the CHF is weak, what am I going to do? I will buy, right? So these are what we do in the market to help us trade better, all right? So this is what it involves, buying and selling. The heart of buying and selling, this is what it simply involves. At this time, I enjoined you to join our team. If you are looking to do trading right, to learn deeper, to really have a good understanding of what it takes for you to be able to trade like a pro, grow your income consistently from a very low level to high level. You know, you want to learn to do trading right from basic through intermediate through advanced level. We are here for you. So please do well to look onto our website, look at the Forex Varsity, look at our consulting or training services, all right? And take a look at which one you would like to take. We have different training programs that you can take a look at and you will join us. So please do well. Let's coach you. Let's hold you by the hand, work with you every step of the way until you're able to get to that level where you attain consistent profitability in trading. So let's go. See you in the next class.